How you doing, everybody? This is 25 and Invested, and today we are joined by Bradley Talks Money, which is also the Darth Vader of Blossom. How you doing, buddy?
I'm doing pretty good. How are you?
Oh, excellent. I'm doing excellent. I love introducing you that way. I think that you get a lot of hate, and I think it's very funny and unjustifiable.
Yeah, it's fine.
So we're gonna quickly go through my account just before we talk about everything else. But my
Sure.
wife's account, we've maxed out my wife's account. It took a long time, but that's it. I have all my registered accounts except for my RSP. So I have my First Home Savings and my TFSAs. They're all completely maxed out.
Perfect.
Moving on to my account, which is already maxed out. I am still up. Actually, my non-registered account, which was the acquires multiple playbook account, a deep value account, if you will, is in the positives, which is the first time it's been in the positives for like almost a year. So it's pretty great. I don't have dividends from Xeqt yet, but I'm just going to go through all time. I'm up 45%. And then this week I'm up 0.68%. And then year to date, I'm up 0.43%. It's been a pretty rough year. All my positions, nothing really changed. I did get rid of Bank of Nova Scotia, and I've gotten rid of quite a lot of my singular stock holdings over the year, and we're going to go over that soon. But because I know you're a stock picker, I figured it would actually be cool to have me and you both have a chat about everything. So
Yeah, for sure.
Unfortunately, the holdings are not the important thing here, more like the ideology, which is why I wanted to have a chat with you.
Sure.
Xeqt still makes up the lion's share of my portfolio. Everything that I've sold goes into Xeqt. And
it looks a lot more streamlined than the last time you and I had a chat.
Oh, man, last time it was pretty good. So yeah, so you can see here, negative for quite a long time for the deep value account, which is hilarious to call it the deep value if it's just been firmly in the negatives. And the actual account looks more like this. I do add to it $50 a month basically, and then every $200 I add a new part to this account. Anytime I get any money from I'll be at YouTube, which has not happened yet, and anytime I get referrals, that just shows up here. So far I've gotten 2 referrals, and I put it right into Xeqt, which is pretty cool. So nice. Other than that, that's it, man. I am slowly weeding myself away from what you do, Bradley. And do you want to explain what you do?
Yeah, it's kind of the opposite of what you're taking on and transitioning to, as you mentioned. But typically what I try and do is individual stocks, individual companies that are trading at significant discounts to intrinsic value, and are maybe unloved by the market, which can lead to substantial upside in the long term.
Fair enough. And what brought you to that? Like, why start that instead of something that is I'm not going to say a little more tried and true, but it is a little more proven statistically.
Right. So I've always been raised and of the mindset that you have to surround yourself with people who are in positions or have accomplished the things that you want to accomplish. So it allows you to clone their behaviors and kind of get into positions that they've gotten into as well. So my investing philosophies in that regard are those of Warren Buffett and Charlie Munger, Monish Pabrai, all the greats who have had substantial amounts of success in individual stock picking. I'm not following Cathie Wood, who goes up and down like a roller coaster and whatnot. There's fundamental long-term success that has been found in a Benjamin Graham style of investing. And that's kind of what I'm trying to focus on and mimic as well.
Yeah, I get you. So you're just trying to play the market the best you can by actively stock picking and managing your portfolio?
Yep, just looking at long term. What happens this week, this month, even this year is honestly not too important to me. Just looking to find quality companies that have the ability to compound wealth long term and buy them at a fair price.
Now on Blossom, I could see you made a few posts about options, and I want you to go
Yep,
through, if you can, go through what you do in concerns of options, because that's something that not a lot of people hear, and not a lot of people on Blossom actually get to witness. So
sure.
how do you do it? What do you do?
So options are a tool. They're something to complement an investing strategy, or at least that's how I use them. So if you understand options, it's essentially the way Warren Buffett uses options, and he's one of the world's biggest options traders in general, which is maybe an under discussed conversation. But um, we use options contracts as insurance contracts. So if I want to buy a company at $50 because that's what I've identified its value as, if I can sell a contract to someone that says, "Hey, I'm agreeing to purchase the shares of this company from you at $50, and all you have to do is pay me a buck 50 every month," then I'm collecting premium while I'm sitting there waiting for the stock that I believe is a quality company, long-term compounder to hit a buy price that works for me. So I have cash on the sidelines, and at the same time, it's generating returns in excess of what you might find in like a GIC or high interest savings account. So that when the stock does get to a price that I'm willing to buy it at, I have extra cash to really load the boat, which goes hand in hand with Warren Buffett's comments on when it rains gold, you don't want to go outside with a thimble. You want to have a wash tub prepared. So it's all about preparing that wash tub and getting yourself ready for those opportunities when they do come up.
All right. So how would you define your success with this strategy? Like, have you found that it's been consistent enough for you, and what's your sample size look like for something like this?
Sure. Yeah, so options are interesting in Canada. Most of my mentors that I've learned from are in the States, so the rules are a little bit different. In Canada, you're allowed to do level two options in registered accounts, which essentially means you can buy calls, you can buy puts, or you can sell covered calls. But you can't, unfortunately, sell puts in registered accounts in Canada. So if I wanted to buy a stock, in like my example I just went over, if I wanted to buy that stock for $50, I would typically be selling a put at $50. I'd collect the premium up front. But unfortunately, can't do that in registered accounts. So we have to stick to our cash accounts for that. Um, so I don't do that as often because a lot of my investments currently are in registered accounts, but it is a strategy that I do implement on occasion. The other option that I work with is calls, which is more specifically covered calls. So that is when I own shares of a company, I can collect a premium because I'm agreeing to sell shares at a certain price. Now, the way that I model the call options that I'm writing, it's in a position where it's not likely that it's going to expire in the money. So I'm collecting a low amount of premium. I'm not looking to get 100% return on my 1 month option contract. I'm actually looking for like 1%. Because if I can get 1% every month, then that's an extra 12% on my portfolio for the entire year, just on a position that I'm already holding. So small dollar amounts further out from the money. And if you get into trouble, you also have the ability to roll those calls out so that you don't lose your shares if you don't actually want to. So that is typically what I'm doing. I've generated some decent premium from positions that I have right now, and to date, I've never had any called away from me that I wasn't ready to have lost. So it's been good so far. I know a lot of people say that when you use covered calls, you're capping your upside, but I have not experienced that yet.
So we actually, so what you're saying is you're taking a fairly conservative approach to options, not using any leverage or taking something deep out of the money.
Exactly. Yeah. No leverage. I'm not buying options. I'm selling them. So I'm collecting premium up front. My return is generated just upon the sale of that contract. Um, and what it does after the fact is largely irrelevant so long as it stays out of the money. So it could, this share price could drop or go up, and it doesn't affect the value of my options contracts that I have there.
That's Very interesting. Maybe after this, I could get you to show me how you do some of that.
We could look at it. I don't use Wealthsimple, so I'm maybe not well versed on this platform at this point. But we can look at it for sure.
What do you use?
Currently, I'm using Interactive Brokers. It's been a really good switch from Wealthsimple. I think the fees are more favorable. The currency conversion is substantially better because the fees are next to nothing. And it's just been an enjoyable experience so far. Wealthsimple is great if you want to do index funds and just get your foot in the door with investing. But if you want to actually manage your stuff um, a little bit more seriously, then I really enjoy Interactive Brokers.
All right, very very nice. Actually, I was looking at Interactive Brokers or Questrade because my wife and I have maxed out a lot of what we have. We were thinking of putting our RSPs in a separate like place, I guess you could say, just to have some spread around. Do you recommend that idea, or what would you think is a good way to go about it?
I think at the end of the day, it's insured regardless of where it is. So I don't know that there's a substantial amount of risk on the table by having it all in one location. Um, I think just stick to a platform that makes sense to you and that you enjoy using, because it's better to understand what you're doing on that platform than trying to force something that maybe can lead to mistakes and whatnot.
That's pretty fair. Now, all right, I got a question for you. Then, what do you do for work? Just as a little background history, because a lot of people follow you on Blossom, and a lot of people do follow you on Blossom, but I don't think a lot of people know the history or know exactly what you do when you give the advice that you do.
Sure. Well, advice is maybe not a word that I would use. I try to avoid
Yeah, my bad.
giving
Yeah.
advice
No, no,
wherever
no.
possible.
Friendly tips.
There you go. But that being said, I work in finance to a sense, accounting and bookkeeping and stuff like that. We have small clients that we manage, small businesses that we help with their financial departments, essentially. So it allows me the ability to see the ins and outs of various industries, various financial statements, deal with the compilation of a lot of those statements, and it's really helped me solidify a grasp of reading financial statements as a whole.
Would you say that reading financial statements is an important piece of what you do, and how important is it that you know exactly what's going on?
Yeah, incredibly. I don't know that I would call it investing if I didn't know what the financial statement looked like for the businesses that I'm owning. That would be more gambling, in my opinion. So I think it's incredibly important to see or to grasp the financial statements, the profit and loss, make sure that income is flowing to the correct locations. You can check your inventory values. I own a lot of retail positions, so checking inventory values is important to keep an eye on, and managing debt and making sure that we're not taking on too much leverage within our companies, stuff like that.
Okay, so would you say though, like, how often do you research a stock and not buy it?
Uh, it's a lot, quite a bit. Yeah, if it's a company that comes across my radar, I might spend. It depends on what you mean by research, right? Because I might spend 5 minutes on something, and within the first 5 minutes, it's easy to tell either this is not a business that I'm going to be interested in, or this isn't a business that I feel I can understand, or that makes sense to me. I know Palantir is a huge company right now that everyone loves talking and investing in, but I'm not smart enough to invest in Palantir and actually understand the business and what gives them uh, intrinsic value over their competition. I'm not saying that other people can't. I know someone who used to work in the FBI who owns Palantir, and he is more than qualified because it's in an area of his expertise, but it's really outside of mine, so it's not even something I'd consider.
All right, that's fair. Now I guess that would lead into how would you find that you get away from confirmation bias in your stock picks? Because a lot of people decide to stock pick. I feel like they have it the plan already to buy what they're researching regardless on what that research says. It's like I dump so much time into something and I'm gonna buy it anyways.
Right. Well, I think the best way to avoid that is to not dump a bunch of time into stuff unnecessarily. That's where you start, right? If you can identify that a company is not high quality and you don't understand it, like it's okay to not understand something. There's 50,000 stocks out there across the world. We don't have to understand all of them. We have to understand a handful to do well in the long term, right? So um, identifying those barriers and where your boundaries are and just trying to stick within them is a great place to start. um, Avoiding confirmation bias, I think it's definitely hard for everyone. Like you said, if it is a company that you think is high quality, you have to be realistic and admit if you're wrong and acknowledge, okay, what are the things that would make this what are the things that would make me wrong about this company, and where are my blind spots, and kind of be aware of those.
Very good, very good. Now we're actually gonna move over towards Blossom with this topic because me and you are
Sure.
we're very we're into Blossom. Me and you are on a lot of comments. We're always there. Um, but I see a very large trend of people with substantial gains, but very quickly in I would just say high conviction plays. You know, you get your Nvidia, your Palantir, your stocks that have rocketed up very quickly. And what how do you find that coincides with people's sentiment on Blossom?
So I think it's very easy to have high conviction when the stock's going up. The question is, can you have high conviction when the stock's down 50%? That's really where you're tested, right? Um, Whether you're momentum trading and don't realize it, or long-term investing, like these are completely different avenues, right? Anyone can look at the hot stocks and try and time their way in and out of it. um, you see it all the time that people enter stocks, hold it for 3 weeks, take a gain off the table, and it's like, okay, are you investing or are you trading? And you have to be honest with yourself in those situations, right? But a company that comes to mind is ATD, so Circle K, for those of you who might not know. When I started on Blossom, that was the hot stock, and everyone loved it. Everyone's in it. Everyone's talking about it. Um, but that's not really the case anymore, because it isn't going straight up anymore. So you can tell momentum shifted on the stock, and then all of a sudden the sentiment around the stock has shifted. So now that that's the case, those are the times that I'm starting to look at it. I actually just ordered a book um, the other day about the founder and about Circle K and all that stuff, and I'm really excited to get into that one, because now that these companies are maybe out of favor in the masses, or in the eyes of the masses, it makes for some interesting playing fields for me.
That's actually super interesting. I remember when ATD when Couche-Tard or Circle K. I remember when that was blowing up on Blossom. Same with Dollarama, but I feel like ATD kind of stole the show there. Even though it wasn't the stock with the best returns, it was still good returns and good enough for it to blow up. I can't quite understand why that was, but I remember that, and I remember a lot of people just sort of barreling into it or just tagging it lots. Do you find that makes a difference in what people invest in on Blossom?
I remember there was people who had like accounts that were solely dedicated to that. Like the Circle K logo was their icon, and it was just, I live
Oh
and
man,
breathe this company. So you don't see that anymore. It's funny how things fall out of favor.
yeah, it is actually. It's cool to be a part of Blossom for so long and then see the stages go through. Uh, I got a question for you, personal.
Sure.
Why do people hate you so much on Blossom?
I don't know. People. Okay, so I know that I am in the minority here, but I'm. If you get to know me, I'm very much a call it like it is. I'm not gonna hold a punch. I'm honest and in your face, and not everyone's used to that in this day and age. Everyone likes to have everything rosy and, I don't know, blowing smoke. and I think there's a lot of toxic positivity online. I'm all for supporting one another, but I don't know that it does any benefit when we're falsely re-emphasizing negative behaviors within investors.
I yeah, I actually completely agree with the idea of toxic positivity. I mean, we are all there to make sure that we're better for it. I just, you know, well, me and you have very contrasting. I'm very much trying to go towards an all ETF style. You're trying to go towards a researched, again, another style style of investing that is still good, but it does require a lot more effort than I can personally put in. And a lot of people on Blossom can see other people gambling and sort of egg it on instead of taking a actual investor approach to it.
Absolutely, absolutely. I think that's part of the issues with social media and finance around social media is there's so much misinformation. Like you're sitting here with $137,000 in this account. And then we have other people who are on Blossom who maybe have $5,000 in their account who are trying to push a stock that they're up 10% on because they think they're the next Kathy Woods or whatever the case may be. We're in totally different positions. There's different how you manage these investments are going to be completely different. If that guy loses $5,000, it's probably not going to be the end of the world. Whereas if you lose $137,000, it's going to be painful.
Buddy, I would be broken. I would be broken if that happened.
Yeah, so you have to defend it. It's not about, I don't know, long-term investing. It's not about generating the highest amount of gains. It's about mitigating your losses and surviving long term.
Yeah, how long you're it be what is it being in the market beats time in the market, something like that.
Absolutely.
Yeah.
Yeah, exactly.
I always found that on social medias in general, just as a talk about YouTube, that the stronger opinion always won. I don't feel like I push my opinion enough. I do throw out helpful tips and make sure that people know what they're investing in, and that I guess skews more towards ETFs on Blossom. But I find that the stronger opinion always takes precedence.
Yeah, for sure. And I think that it's hard to have a strong opinion about look at my ETF that went up half a percent this week versus look at this stock that went up 30% this week. I'm so smart because I own it. Right? Like it's what's in your face versus what's slowly growing in the background. It's going to be completely different 20 years from now. You might be in a better position because you're just consistent versus someone who's throwing it into who knows what stocks because some guy on social media said it's a hot buy.
Buddy, I just want to survive long enough.
That's all it's about. Like it doesn't have to be difficult. You don't have to rush it. Um, it's you only have to get rich once, and you just have to defend it, right? It's not necessarily about who can get there fastest.
That's fair. Yeah, I feel like a lot of people are like they're taking such a large amount of uncompensated risk when they're stock picking, and they're not mitigating that by doing the research or just picking a strategy that they can withstand for long periods of time.
Yeah, absolutely, absolutely.
Do you
You see
think?
people all the time who just don't even understand what they're buying. Like I remember to this day, and I will always remember when someone told me that they expected one of the weed stocks to go up 42,000%. That was their price
Hold
target.
up, Mamba Forex, right?
Yeah, so
Yeah, I knew it.
it's wild that people just are so disconnected from reality. Like it would have made that company, I think it was Canopy Growth that he was talking about, but it would have made that company the biggest company in Canada. And it's like there's no grounding in reality for a lot of these guys, and that's where the line between gambling and investing is so gone in their mind that those are the types of guys that I fear for.
That's entirely fair. Actually, I remember that guy. I
Well, That's the thing, is you remember him. Where
Yeah,
is he now? Right? Where do they go? They all disappear because they lose everything.
that's true. Yeah, well, I mean, me and you are here, and he's not, right?
Yeah,
So we're doing
you
something.
try and warn people and they don't like it, so it is what it
Yeah,
is.
yeah, right. If only. I tried doing a little bit of saving, but some people just don't want it, man. Well,
Absolutely.
you
Yeah.
know, man, thanks for joining me. I know I was a little quick on the portfolio. I mean, I'm just it's mostly Xeqt. There isn't a lot to look at, when you're YOLOing into a low cost ETF. So,
Yeah, absolutely.
yeah, well, I mean, that's investing. It's boring, isn't it? That's why I wanted to
Yeah, exactly.
bring on someone
Exactly.
else and have a chat. I'm gonna continue the chat after this, but I'm gonna sign off. Thank you guys for watching. Bye now.
Thanks.